The Geopolitics and Empire podcast is joined by ex-investment banker Simon Dixon. He wrote the first published book to mention Bitcoin called Bank to the Future in 2011, I believe, and is co-founder of Bank to the Future, the largest global online investment platform, which has seen over 850 million invested in FinTech and Bitcoin companies, which you can visit at bnktothefuture.com. He also hosts two excellent weekly shows on his YouTube channel. We'll be talking the new Great Depression we find ourselves in, the coming monetary reset, and new Bretton Woods, among other topics, as well as some tips on how to survive. So how are you doing this afternoon, Simon?
Really good. Thanks for having me.
Sure. Now, I first discovered you through some of the interviews you've given to Max Kaiser and elsewhere, and it's I would highly recommend again to listeners your YouTube channel and your material, which we'll talk about at the end. It's very informative, and I didn't want to waste time on explaining the fact that we are in the midst, I believe, of a new Great Depression. Listeners should know this by now, but perhaps I could just start by getting your take on how bad you think it's going to get. Because as bad as the economy was before COVID-19, the lockdowns have done to the global economy, I think, the equivalent of what World War III could have done. And, we've heard reports, the IMF saying that this is going to be worse than the 1929 Great Depression, that it hasn't been this bad since 1870. I think it's going to be a financial collapse that perhaps we have not seen in centuries. So how bad do you think things are going to get?
Well, the answer to that is 100% politics, because we find ourselves in a very unique scenario that we weren't in the 1930s, that the governments and politicians tried to get us into the 1930s, but they didn't succeed. And in 2011, I uploaded a video to YouTube called The Great Depression of the 2020s. And in that video, I was talking about the different economic trends and the fact that we're at the end of a debt cycle. And because in 2008, they used financial engineering to rehypothecate the debt cycle rather than fix the problems with our monetary system, this is the one where politicians will have to chuck everything because they've lost all their monetary tools. They've lost all their fiscal tools. And now the only way to get your way out of this one is to have a redesign of the monetary system altogether. So in answering the question, we could have deflation, we could have inflation, we could have growth, and another rehypothecated Ponzi scheme, or we could have, a depression followed by, a recession followed by a depression. I personally believe that we're in the Great Depression of the 2020s. The challenge with today's market is that the economic reality is not reflected in the markets because all of these tools through quantitative easing has driven record wealth inequality. But the reason that there's record wealth inequality is because the quantitative easing money is being used to prop up the assets of those who own assets. And because of that, the market is not a reflection of the economics. And so really, if you look at all the political situation globally right now, it's around who's going to give the most stimulus. And so stimulus is, the central bank taking the other side of all markets, not allowing it to crash. And therefore, it's a function of can they rehypothecate? And the answer is yes. But in the process of rehypothecating, we're going to have all sorts of innovations like central bank digital currencies that take away all of our freedoms, liberties, and privacies. So they could fix the economy. Fiat money is broken. It's a debt-based Ponzi scheme. But in doing that process, we move towards a more socialist and eventually communist style in its infinite way of organizing the economy.
Yeah, I wanted to get to that, and a number of experts that I've spoken to have confirmed what you said. Tuomas Malinen, the Finnish economist we've spoken to, I think Mark Friedrich, the best-selling German economist, and others. But then talking about this transition, the dollar as a world reserve seems to be declining, and the digital yuan has the real possibility of leapfrogging, let's say. And what I really like about your analysis is that it's honest. You say that we don't know what the outcome will exactly be like because it's politics, right? And as opposed to many experts, who cling to one theory or idea, And of course, this shows in your smart suggestion to prepare for a diverse array of scenarios. And so we can hear already central banks, nations, and international organizations talking about this new Bretton Woods, namely the IMF recently. And there was always this dream by the globalists, let's say, since the original Bretton Woods, to have a single global currency emitted by the IMF, such as Keynes' Bancor. And today we have the SDR. And as you say, I think one thing we can know for sure is that whatever it is going to be, it's going to be digital. And so what do you think the new Bretton Woods setup could possibly look like?
Yeah, so taking a quick step back, the reason that this election was so heated is obviously because of the health crisis. But actually, this election in the United States was actually voting for something that no one knew they were voting for. And that was who is going to negotiate the future of the dollar and the monetary system. Because globally, every government in the world has had to chuck everything that they can at this health crisis. And because of that, they've, taken away all of their traditional tools for stimulating and organizing an economy. And so the IMF comes along and says, well, this is a Bretton Woods 2 moment, which was, coming out of the war in 1944, they had the opportunity to redesign money with the goals of coming out of the post-war environment. I believe that we're going to enter into a similar kind of negotiation. The dollar, the geopolitical situation between America and China has reached, the stage now where there are currency wars, there are trade wars. One country, China particularly, has all of these financial products that they've invested in the US. And the US believes that China was responsible for screwing up their economy and leading to lockdowns. And so these geopolitical tensions can lead to, financial weapons of mass destruction being used in order to try and renegotiate who's going to continue and be the future. Now, China on one side has been completely empire building. China was using tech wars to invest in 5G, which is, the future of the internet. America's 5 years behind that, and China's deploying that around the world. China has been investing in African nations and Asian nations, and investing in their infrastructure, which is the process of empire building. At the same time, they've been trying to get ahead, while America has been making it really difficult for the technical industry to implement financial innovation, being resistant to things like said digital currencies and all sorts. China has just plowed along and slowly made cash almost completely illegal in their country through WeChat, and at the same time implemented a central bank controlled digital currency because they know that the future is controlled through technology. And so China has all done everything. They've also been accumulating as much gold as they can get their hands on, and not really transparently disclosing how much gold they've accumulated. So we have this geopolitical tension. I do believe that the IMF at Bretton Woods 2 is going to try and create similar to what Facebook tried to create, which was with the Libra project. They were trying to create a digital currency that's backed by a basket of currencies, so that you can have coordinated, governments and members trying to, you've got the China camp, which is trying to circumvent the US dollar, and they're rallying the sanctioned countries in order to do that. And then you have the IMF and the US camp, which will look to, put together their allies. And we enter into this big currency war situation. And then you have politically neutral currencies like Bitcoin. So this is where I think we're headed. And what happens from those, as I said, brings me back to the original thesis, is that traditionally, you talk about, you've had guests like Peter Schiff. Peter Schiff would recommend the dollar's going to crash, but he's been saying, and Bitcoin's going to a scam. And he's been saying that for a decade now, and the dollar hasn't crashed. It might in purchasing power, but betting against the Federal Reserve and their financial ingenuity can make you go broke in the process. And it might get the right bet in the end. But so I think about the US being able to continue their situation. What does the portfolio look like? Every single fiat currency in history has failed. The US dollar will fail. So gold is the traditional bet when you're having a transition in terms of empire and currency. But then you need a portfolio that completely operates outside of the financial system, which is why Bitcoin is reaching all-time highs now. And we've got record levels of corporations trying to protect their balance sheets, billionaires trying to protect through their family offices, and next, governments that want to use Bitcoin as a tool to gain more power in currency wars ahead. So I think these are the three areas that investors need to look at.
And you mentioned the health crisis, and I was just curious because, we've known for a long time the financial crash and monetary reset has been coming. And then, all of a sudden COVID-19 pops up, accompanied by Klaus Schwab and companies, a great reset. So, you've had the IMF call for the new Bretton Woods new Bretton Woods moment simultaneously as the World Economic Forum's call for the Great Reset. I mean, do you see those two things as the same?
So I think they could be similar agendas. They could also end up competing agendas because one person or one organization or one group of cartel will want to control the currency that allows for the Great Reset to happen. And so the Great Reset is this 1984 Orwellian style economy that we move to when we officially, say that we move, at the moment, if you look at the trends, China looks more like America every day and America looks more like China every day. That's where we are. And because all the capitalist countries are moving towards socialism and all the communist countries are moving towards socialism, and then you converge in this middle of this hybrid way of organizing the economy that has more and more government intervention. Well, the way that you kind of get rid of free market money is the removal of things like fractional reserve banking. While fractional reserve banking is a crony capitalist Ponzi scheme whereby banks create digital currency every time they issue a loan, and therefore you have to have increasing levels of debt in order to have an economy. Eventually, that system can lead to insolvency in the banking system because you have to take more and more risks, and the insurance schemes that back our deposits only back about 1%. So, if you're looking at something like FDIC, it does not factor in more than one bank going through systemic trouble at the same time. That's why in the last financial crisis, you have bailouts rather than taking those bank insurance and allowing the banks to go bust. In this one, I think that you have these competing agendas that can be also merged. Now, the issuance, what is a central bank digital currency useful? Well, it's most useful in a highly technology-driven economy. What could you do with a central bank digital currency? Well, you can automate negative interest rates to discourage savings. You can automate tax collection so that global governments that are part of, the global currency can all have agreements in how they divvy up those automated tax collection when we transact through the digital currency. You can do helicopter money very easily. So you can allow a bank to go bust. They don't need to bail in. They don't need to bail out. You can just let the bank go bust and say, well, if a bank goes bust, download this app. And if you had $10,000 with Chase, you've now got $10,000 of the central bank digital currency. That's non-inflationary money. It's actually a deleveraging money. You're not introducing new money. You're just destroying one form of money when a bank goes bust, replacing it with a new form of money, and taking out the debt in there because you're issuing it direct. And so this really merges upon the central bank and treasuries globally around the world becoming one balance sheet, which is why the new phrase that I talked about in the book, Bank to the Future, a decade ago, is modern monetary theory. And that is where money gets injected directly into the monetary policy and the fiscal policy come together, where it all becomes one. And so a central bank digital currency, you could do that on the country level. And it all depends on the two big wars that are going to be fought is privacy versus the removal of privacy, and protectionism versus globalism. The IMF agenda is globalism, But the countries could also, like, in America, they were, it was pushing for more protectionism. And as a result of, this COVID situation, people are saying, well, we need to become less dependent upon other countries. And so these are the big wars that are going to be fought ahead. And these global resets could be used on the individual country level, or the central bank digital currency could also be used at the global level.
Before going further along the line of how bad things can get with CBDCs or how good things can get with cryptos, you mentioned war. Just a final thought on the dynamic between Russia, China. The U.S. empire declining, China rising. Do you feel that if there's an agreement with this new Bretton Woods or great reset, or things kind of work out there, that the Thucydides trap can be avoided, or that we could see a military conflict between these countries, or do you think things could get hammered out peacefully?
Anything can happen. I don't think it will be peaceful, but I don't think it will involve bombs. I think we'll continue using financial weapons of mass destruction rather than actual bombing countries, because there are so many tools that you can use in these currency wars, in these trade wars, in these tech wars. And I think it will continue along those lines. It would be, we are in a nuclear age, so everybody knows that if you entered into some kind of war between superpowers, then the end result is nuclear warfare, which is bad for everybody. So I do think that we're going to be using financial tools to actually win World War III as a new empire prevails.
Or as you said, biological warfare. Just finishing the thought on the CBDCs, many experts such as Richard Werner, who's one of my favorites, say that CBDCs could eliminate banks and create this totalitarian cashless system. I know here in Mexico, they've already proposed to get rid of the 1,000 peso notes as well as the 500 peso notes. And what happens if the future turns out to be more like this dystopian science fiction technocracy, complete with a Chinese style social credit score, where access to your account could actually be shut down based on your reputation? Something like in Black Mirror or 1984 scenario. Have you done a thought experiment on this kind of future? And how would we then? How could we function in this type of system then?
Yeah, well, I would go as far as say that's inevitable. Just look at the trends. I wouldn't even say that's a thought experiment. That is the future of fiat currency. Fiat currency is all about command and control. And when you implement technology into that, and it's infinite, with the government goals of, it started with 9/11 when you had anti-money laundering. Then it moved to, this health crisis now is the next one, and the financial crisis. And gradually, slowly, you remove what makes up a free society, in the name of, tackling some of these big challenges that the world throws at us. So what's everyone doing now? Well, the next thing we're all opting for is the complete removal of privacy. We're not going to be able to get on a plane until we've gone through, the compulsory vaccine, and that's going to be connected to our currency. Your currency is going to be, your wallet's going to be connected to your passport, which is going to be connected to your health records. And at the same time, you have this competing force, which is the ability to own your own money and own your own data, which is why, I've been looking at, as an investor, I've been investing in two industries, which is the growth of financial technology, because financial technology is going to be used in this fiat world. And then the growth of the peer-to-peer economy. And so Bitcoin became interesting to me because it gives you the ability to own your own money, spend your own money, and have a monetary policy that doesn't adjust to the whims of humans. And so this is where you have these two fringes of innovation. A financial technology that's all about command and control, but has benefits. And the benefits are you get stable fiat currencies denominated in the same store of value, as it were, that you spend in. And I'm not talking about long term, I'm talking about short term. So fiat currencies are very useful for managing your own personal financial affairs. But you exodus all your savings out of fiat currencies because they go down in value over time. And so that drives you to speculation. And as the financial markets are intertwined into a debt-based Ponzi scheme, you end up with this alternative financial industry, which is Bitcoin, and all the innovation that comes from that. And because that technology also happens to give you the ability to intersect and own your own data, then you have these two competing agendas that gives really consumers the choice. So there will be times when I will use that fiat money for a very small of my percentage, knowing that it will all be under surveillance. But there will also be times when I will look to hold my savings in what I believe to be a more privacy-centric store of value that gives me, but also Bitcoin has the ability to have these transactions published and shown when you need to, but still maintain the privacy that you need.
So as we just discussed, the dystopian central bank digital currency world, and then so you would say then like Bitcoin and the cryptos are this like more libertarian, decentralized, utopian sort of thing. And so going into the future, you see this space really growing, and that space kind of allowing us to somehow survive or get along in this central bank.
To try and summarize it into something that everyone can understand, fiat currency becomes communism, and Bitcoin becomes free market capitalism. And you, rather than actually deciding, I want to live in a country that is, I want to live in China or do I want to live in America? Everybody lives in this socialist country, which is where all of the trends, because of debt-based Ponzi scheme, take us. Communist countries become more socialist, capitalist countries become more socialist. But then that's your geography. In terms of where you live in the financial world, you have a bit of communism, which is your fiat money, and you have a bit of free market capitalism, which is the financial system built around Bitcoin. And you opt out and you say, some of my money, my spending money is in communism, and my savings are in capitalism, free markets.
There's been a interesting question that listeners have asked me to ask guests that I've also wondered about. So we know in the current system that we have, we've got these wealthy global elites, mafias, drug cartels, intelligence networks. That they use cash to hide their under the table or offshore wealth, or to do their dealings. And so if we go to this digital system, as they're doing things now, they wouldn't be able, to let's say, some of the Western countries that have, let's say, funded ISIS, right, or supported questionable rebels in Syria. If we go digital, they can't give cash anymore. So would like certain cryptos fulfill this cash function? I mean, how would global elites or such folks be able to hide their assets, or would they use some kind of altcoins to do that? How would that work, you think, in this new world that's coming?
Yeah, so Bitcoin has its challenges because it sits kind of in the middle between giving you the ability to have as many wallets as you want, but any transaction you do are on a blockchain. And the latest, development change are all around privacy enhancing features. But then alternative cryptocurrencies were built that way in the first place, where they have privacy built in. So you get this mountain of innovation. The more you have the enforcement of not being able to own your own money, not being able to spend your own money, and having a monetary policy that dilutes your savings. You get big innovation around being able to own your own money, being able to spend your own money, and having a monetary policy in these competing cryptocurrencies. Now, for me, Bitcoin is our world's best shot at ever achieving sound money. But alternatives like Ethereum are allowing people to build and innovate these decentralized financial products. And some of them are complete scams. Other of them are taking something that's going to be used and very useful in the future. It's at that very early innovative stage. But the fact that you can do it means that people are going to get more and more innovative and more better at that. And you have these competing forces. So for me, Bitcoin is like regulating the regulator, as it were, which is a very healthy force. And then if Bitcoin gets too powerful and concentrated, which inevitably everything does, you have competing cryptocurrencies that if you lose the ideology behind it and start adapting the cryptocurrency to fit in with the dystopian vision of the world, then you have other things that compete. You can't take this innovation out. It's not going anywhere. But I do believe that Bitcoin is just statistically too hard to change at this stage, and our world's best shot at ever achieving digital sound money. I
know you don't really do Bitcoin price forecasts, but some interesting experts such as Raoul Paul of Real Vision and Max Kaiser are saying the price will go to the moon, like to $250,000 or eventually $1 million. I would think if this were true, it would depict and be reflecting the absolute worst in terms of the economic depression, which would mean the total death of paper currencies. I mean, what are your thoughts on these calls? Up to $1 million, are they feasible and reasonable in theory?
They're feasible, yeah. I mean, when I spoke at the first Bitcoin conference in the world, I never imagined it would ever get this far. I've seen my $30 Bitcoin crash to $3. I've seen my $1,250 back Bitcoin crash to $250. I've seen my $20,000 Bitcoin crash to $3,000 and now go back up to $20,000. I fully expect my $100,000 Bitcoin to crash to $30, and my $1 million Bitcoin to crash to $400,000. Bitcoin is a very volatile thing. The risks are pretty much known at this stage. We know what the risks of the experiment failing. I created a video just on that topic yesterday on my YouTube channel if people are interested in the risks that people need to be aware of. But you've got this fixed supply that every year the desire to own your own money, spend your own money, and have a monetary policy that can't be changed becomes more and more useful to more and more people. So the reason that companies are buying Bitcoin at the moment, publicly traded companies, is because they know that so much money has been printed. And so they're looking for, the quantitative tightening rather than quantitative easing. So those three use cases that Bitcoin fulfills, all of the trends in the traditional world are driving people to want to use and have the ability to do that. And so because 18.5 million of them have already been created and there's only ever going to be 21 million of them, and now all the institutions are trying to get the fresh Bitcoins from the miners, so they're not even hitting the market. The scarcity and the rarity of this means that the only way to get it is to pay a higher price.
I wanted to get your take on which way the winds are blowing in terms of regulation, because it seems to me that, I don't follow this space too closely, but it seems to be positive as I'm starting to see countries like here in Mexico, cryptos are not regulated, but now the government is starting to propose laws to regulate and tax cryptos so people can legally purchase them and pay tax on them. And so do you see countries around the world moving in this direction where it's making it then easier for people, not to be afraid of investing and then getting caught by the tax man, but things are kind of like moving towards this type of regulation? Do you see this developing like this?
Yeah. So, look, I've invested in over 100 companies in the industry. The largest Bitcoin exchange in Mexico is Bitso. I'm a shareholder in Bitso. And, they were driving the innovation and regulations in Mexico for the exchanges. There's an important distinction here. The actual asset class itself cannot be regulated. It's incapable of being regulated other than the current regulations, which is maths and code. It's the algorithm that regulates it. But then when you intersect with it and you create financial products or you give people the ability to exchange it, then jurisdiction by jurisdiction, that can be regulated. And the trend has been by a vast majority, of all the countries that have given out opinions about where to go with Bitcoin next, about 96% of them have chosen regulating the companies that intersect with Bitcoin over an outright ban. And so only, a few countries have tried bans. I was in Shanghai when China tried to when they did ban the cryptocurrency exchanges, not Bitcoin, the cryptocurrency exchanges. And then all of the data went to Japan, Korea, South Korea, and Singapore. And so China lost out on all of the data that they would want to have collected by allowing people to convert their fiat into crypto. And so there's a real disincentive to ban because if governments want to collect all the data from fiat to crypto, they don't want to give that data from fiat to crypto to another country, because then they don't have the records that they want in order to find out who's actually in the crypto market. And so I think that there's a global competition to try and regulate the onboarding and offboarding and do that through their country. And so that disincentivizes the ban that is feasible, but would lead to, some bad outcomes for that country.
And you mentioned China. There have been interesting developments regarding the Chinese renminbi. We've spoken a few times with Alistair McLeod of Gold Money, which he's talked a lot about this. But there was this recent creation of the Shanghai Gold Exchange, which allows foreigners then to trade yuan for gold, which is, I guess, something that can help internationalize yuan, or more importantly, help China trade with other countries without the US dollar. As the Belt and Road chugs along, how do you see the yuan and this digital yuan? Is it going to lead the way in de-dollarization and the spreading of the gospel of the digital currencies?
So all currencies are digital already. Only a tiny percentage of them are actually cash and coins. So to me, it's not really a trend. It's just the difference is who issues it and who creates it. And so traditionally, in our economies, you've had the banks creating the digital currency every time they issue a loan. But when governments create it or central banks create it, it's the mechanism by which they create it that becomes whether you have radical change or not. All currencies are digital already. And so if you remove fractional reserve banking, then you get less banks creating digital money backed by debt. And you can replace that with either a central bank creating it, which is, what we've seen with QE. They do it through the debt capital markets, which means the rich get richer. We've seen the inequality effects that have had as a result of that. Or you actually do it through the government direct, which is, we've seen experiments for that as well. In the American Civil War, Abraham Lincoln authorized the issuance of the greenback, which was just the issuance of the currency. That would now be digital. It would just be an app. So, all of these trends that we talk about, they're happening, they're real. They already are underway. But changing who creates it means who loses. And so if we end up with this world that we're going towards now, you can let the banks go bust, consumers don't lose their money, and you can issue it directly from the government, which takes us closer, because at least with fractional reserve banking, money creation was one step removed from the government. Now, if we move back to bringing the power back to governments, you probably have a faster erosion of the currency and decrease the time cycles at which fiat currencies fail and new fiat currencies come around, because it makes it easier to abuse.
All right. And one of my, I guess, final questions is, I just recently watched your 4-part video series, which is excellent. And so that goes into more detail as well as what you do at Bank to the Future. So maybe you can give us just kind of like, a lot of people, are interested, what do I do in this environment? How do I protect myself? How do I survive? And so, what would be some big themes? And in those videos, you talked about, holding hard assets like precious metals, gold and silver, I guess property as well, and then the whole crypto space. And so what are some things you could recommend, tips in terms of surviving, and what you do at Bank to the Future?
Yeah, so a Bank to the Future, we're a platform that allows people to invest in financial technology companies. We're the longest standing company in Bitcoin, and we're the first ever securities business in the industry. And you can take a percentage of your portfolio that you want to allocate towards long-term, high-risk, high-return assets, and you can invest in a portfolio of companies in this industry. And so we've done, over 125 different companies. And many of those have become multi-billion-dollar unicorns, like companies like Coinbase and Kraken and Bitfinex and BitStamp and Ripple Labs and many other companies that are now household names in our industry. In terms of the 4-part video series, I found a lot of people were kind of, jumping around to these different asset classes based upon a particular ideology. So if you listen to someone like Peter Schiff, then you end up in gold and foreign currencies and think the whole US dollar system's going to implode. If you listen to, someone like Max Kaiser, then you're going to be moving towards Bitcoin because the Bitcoin is the future. And why would you have anything in fiat currency? If you listen to Warren Buffett, he'll tell you, you need to be seeking value and buy undervalued stocks and all this type of stuff. So what I wanted to do is create a fully comprehensive video series of making the case for why we're in the Great Depression of the 2020s by covering about 5,000 years of monetary history and helping people understand what they need to know. And then the second video is on the lessons and mistakes of all these investors and how to cherry pick the bits that can work for you and also avoid some of their mistakes. And then the third is how to build a retirement plan centered around some of the financial products that you would want to look at if you were building it around preparing for inflation, deflation, growth, or depression. And the final video is where I'm going to be taking $1 million of my personal savings and building a retirement plan B, is what I call it, to prepare for this. So that's a free video series. And then anyone that actually wants to build one, then there's a paid program at the end of it.
And for investing and Bank of the Future, do you have to be a certified investor? Is there a minimum amount to invest in some of these companies?
Yeah, so the minimum investment is $1,000. And if you qualify to invest, it's based upon your jurisdiction. So some countries will have certain restrictions, others will have different restrictions. But when you actually sign up, it just walks you through a suitability test. And it will let you know whether you qualify in your country based upon your local securities laws and regulations.
All right. That's definitely something to check out. Might be confusing for me because I have 3 citizenships, but do you have any final thoughts then for us as we finish 2020 and move into this dark winter and into 2021? Any final thoughts for us?
Yeah, the way I always end most of my content is I do let people know that some things might sound really scary, but today we are actually, firstly, certain elements and ingredients of what we have today are unique. But if you look back in history, nothing's unique. We have been in these situations. They just look slightly different. It wasn't technology driven. It was just a slightly different flavor. And we get through that. And the reason we get through that is because today you are alive in one of the most interesting times in financial history. And you either going to be allowing other institutions to speculate for you, or you're going to have to take control of your own speculation. But we live in a speculative economy. And so, this is going to be really rough for some, really great for other. And I think people should really educate themselves to try and get on the right side of these trends through podcasts like this, and just making sure that they're really, trying to take these different bits of information and act accordingly.
As it was said in Ecclesiastes, there's nothing new under the sun. All right. I will leave all of your links in the description, your book, your YouTube channel, Bank to the Future. And I really do urge listeners, as well as your Twitter, which is fantastic. And I do urge listeners to check out Simon Dixon, all of his work and material, and check out Bank to the Future. A lot of it has confirmed my own analysis of where we are and where we're going. And so thanks for being on Geopolitics and Empire. Okay. Thanks for having me. I hope you enjoyed this Geopolitics and Empire podcast and interview. I would like to remind you that our website is geopoliticsandempire.com, and you can sign up for our mailing list that goes out each weekend with the latest podcast and a long collection of important news headlines. It's good to sign up for the newsletter in case we experience censorship and deplatforming. You can help the Geopolitics and Empire podcast by subscribing to and interacting with all of our channels such as YouTube, Twitter, Facebook, Gab, Minds, and Steemit. You can also help us by leaving a rating and review
on your favorite podcast platforms such as iTunes, Castbox, Stitcher, Spreaker, and so on. Finally, if you value our work and our mission and would like to see us continue interviewing experts from across the political spectrum, please consider leaving a one-time donation via PayPal or Bitcoin or becoming a regular monthly supporter on our Patreon. All the links can be found on geopoliticsandempire.com. Thanks for listening.